Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about STEM Inc. This is a company that we have covered quite often on this channel, and I wanted to provide some further thoughts and feedback as we continue to see the price decline with another big day at negative 5.37%. So the stock is all the way down to $14.10 with after hours closing in on $14 a share. That provides a level set base where when we look at the company, they now have a market capitalization of $2 billion, and they have a very similar or very close share price to the original transaction with Star Peak Energy Corporation, which came out publicly via SPAC at $10 a share. So the question is, as we hit a new 52-week low today, what is the expectations? What's going on with this company? Why are we seeing such crazy moves in their chart? And what I'm going to be looking at is some of their SPAC presentations previously, as well as what they are showcasing today. And how do I feel about buying the company? Full disclosure, I'm still long STEM, and I continue to see this as a great opportunity. I have continued to have to reshift my viewpoint. Feel free to provide commentary down below, or we have a STEM channel in the Discord to talk about your thoughts here, because what I don't want this to be is an echo chamber where I am continuously providing my opinion, even in the face of seeing the stock continue to decline. So just let me know, keep me honest, but this is a company that I have done a lot of research on and will continue to follow. What I want to be focusing on primarily today is in the fundamentals. You can see that right now they're showcasing the price to sales on TD Ameritrade's website of 28.86 in the right-hand corner of your screen. So what that means, that TTM trailing 12 months means over the past 4 months in terms of revenue, what is that price? And so this has dropped very significantly. And what I would highlight is we're actually missing some income from that Q4 2020 from when the company was not public. So what we have right here is an interesting buying opportunity. Last time we viewed this, I said that the price on the stock when it was back around $20 a share was showcasing around a 45x price to sales ratio, which is very, very expensive, especially to pay for growth. And this is a company that is continuing to grow very, very rapidly, albeit they are financing some of that growth by going out and purchasing revenue. So the question is, what is that Q4 number expected to be? It is going to be between 50 to 60% of their total revenue. So I would expect that to be around $70 million, because they're still forecasting $147 million on the year. And as you can see with the numbers that we have available here, of just north of 75 million, we would expect to see most likely another 75 million in revenue. So should that number hit, that would drop us down into just about a 15 in terms of the price to sales ratio, which is very, very attractive for this growth. The question is, how long do we have to take to get back to some of those year highs that we saw last February of north of $50 a share? This is a company that I continue to track, and one that, again, I continue to have a lot of hope for. So this is something that we've seen quite a number of price targets come out north of $30 a share. So why are analysts so bullish? Why am I so bullish? Well, compared to a lot of other SPACs, they have continued to execute based off what they originally stated. So what I want to do to kind of further prove the company, or at least highlight some additional information, I'd like to showcase what I'm looking at from the original SPAC presentation. So what I'm sharing on the screen is the original, or I believe the follow-up SPAC presentation. So this came out on January 25th, 2021, and they have provided a significant amount of information in this bookings approach and financial forecast and everything included here. So what I want to highlight is, as you can see, in the first quarter, they said they expected 5 to 10% of total revenue, 5 to 15% in the second quarter, 20 to 30%, and then a whopping 50 to 60%. At the time of this booking, or at the time of this presentation, they already contracted more than $200 million in backlog. Keep in mind that backlog means that the company has already signed a deal for those engagements, and oftentimes they are receiving cash, or at least part of that cash. And what they have to do to recognize that revenue under GAAP accounting standards is to deliver on those projects. So throughout this year, a number that I've highlighted every single time is what was the revenue that they delivered on and what was the contracted backlog. What was very impressive is oftentimes the company was going out, they were getting new backlog growth, they were getting those software bookings, those hardware bookings, and they were turning around and growing incredibly quickly. So if we have that 5 to 10% here, what was the actual expectations, or what did they actually deliver from their latest presentation? And you can see that here on screen. This is the latest presentation. This was produced on January 6th of 2022. We've already reviewed that on the channel as well. So that 15.4 million in terms of the overall 147 million, it was supposed to be from 10 to 14%. That 10% number would have put this at 14.7 million. So they were right in line with expectations. The second one, 5 to 15%. So this was actually a beat. I apologize. 5 to 10, beat on the upper side, 10%. 5 to 15% again was a beat right on the upper side, that high end range. Lastly, you can see that 20 to 30%, once again, right on the upper range. So the question therefore is this number going to be coming in as of north of that upper range? 50 to 60, 50 to 60, again, we're expecting that to be around $70 million. They are still highlighting this calendar year that they're expecting to hit this total number. This is another item I would highlight where their EBITDA is expected to be negative 25 million, which if we talk about what they've been growing and expecting to see, I'll drop down below where we actually showcase those forecasts. You can see that for the 2021 year, they expected adjusted EBITDA of negative $25 million. So the expectation going into 2022 is this will be the first year that we have positive $28 million in adjusted EBITDA. And next year, 2023, will be the first time that we actually see the company be profitable. At that point in time, it'll be a superb growth opportunity as you see the company continue to leapfrog. Now, I haven't seen any updated guidance at this level of forecast, but it's something that I would expect to see over the coming months, and especially the next earnings report, which we can expect to be on February 14th at this point in time. And again, all of that is purely estimates right now. So the question here is, am I willing to pay for a $2 billion company if the expected revenue next year, or rather this year, is $315 million? So if I'm looking at the fiscal year 2022 numbers, that puts me at just north of 6 times sales. Is that a number that I feel comfortable with? For me personally, that is incredibly exciting because a lot of the companies in this industry are generally trading at 10x sales. So already there's the opportunity to capitalize on that growth. One of the key concerns with hypergrowth stocks in this upcoming calendar year is the fact that we're expecting to see a rising interest rate environment. Luckily, STEM just did a large share or large capital raise leveraging debt offerings of senior convertible note bonds. Essentially, those are green notes that they are able to sell and pay an interest rate of 50 basis points or 0.5% compared to a normal interest rate that you would expect to see on something along those lines of between 6 to as much as 14%. Now, those shares can be returned for cash or stock at around $28 a share. So the question is, if I feel comfortable about this $315 million right here, then how do I feel about some of the free cash flow numbers down below? And the question therein will be, is that going to be net income? What will that actually look like? So I'm hesitant to label free cash flow as my profitability metric, but it is something that we want to be covering and expecting, and what will be the actual net income, and is 2023 going to be the definitive mention at that point in time? So looking forward, especially that long term, if we were to expect to see these 2025 numbers appear, which again is the items that I have been looking at, and you were to see a very high PE ratio or even a normal price to sales ratio, this is nearly $1 billion in revenue. So if the company were to trade at current expectations and we were to expect to see a 28x price to sales ratio, then you expect to see a $28 billion company, which would put the share price north of $100 a share. So all of that could be, again, this is just me talking out loud, thinking through this. This is from the very first presentation that we've seen. But I believe that the growth outlined here above is possible. I believe that the team has a plan and they've continued to deliver. They've made acquisitions, paid a lot for that acquisition, but we'll continue to see what that expectation provides. But the point being is this is a SPAC that has delivered on what they originally promised, and they look poised to continue doing so. As such, I am looking to continue to be involved in the company and to invest. Over time, I continue to put money in on a bi-weekly basis, so every 2 weeks, because I believe in the company long term. That being said, I also consider or encourage index investing, and this is going to be one of my more speculative holds. The company continues to grow very strongly. However, I do have concerns over some of the marketing material they've produced in terms of how they are relaying that information. I also have concerns over some of the insider sales as individuals continue to sell large amounts of their stock, which tend not to be very encouraging for those of us who are looking to be long-term shareholders. However, I also recognize that if you are an overnight or over a few year millionaire, you want to cash in on those profits. So that being said, again, if I am looking at the fundamental valuations and I go back to our newest presentation here in the platform and I look at some of the recent developments, the numbers associated with Also Energy here are, as of September 30th, 2021, is going to be non-inclusive of the total data available for full year 2021. Aside from the $23 million annual recurring revenue that you see here, which was as of October, I would expect to see some of these numbers continue to rise, which makes that if we have $57 million in revenue as of Q3, we could reasonably expect to see this be closer to $70 million, which may offset a potential miss if we were to see that from STEM. Or if STEM were to hit their number and bringing $50 million, you would see a total revenue expectation of right at $210 million, which is well on their way to repeat performance of next year, where they're expected to bring in more than $300 million. So there's a lot of excitement surrounding this Also Energy acquisition, as well as the fact that this is a company that is much closer to profitability than STEM themselves. That being said, everyone is looking to grow. As such, they will continue to perform, or they will continue to grow until we start to see some downward pressure on some of those margins. So that's what I'm watching. I wanted to make that update as we prepare for a STEM earnings preview, which you can expect in another 2 weeks, pending the finalized date of that release of that earnings date. If you have any questions, let me know down below. If you have any constructive criticism, happy to hear that as well. Again, I talk about STEM a lot. I don't want to be stuck in an echo chamber, so any feedback is appreciated. If you made it this far, please leave a like and subscribe. I produce a lot of this content, and your feedback is beneficial. Thanks. Talk to you later.